and welcome back to Dukascopy TV. I'm joined by our studio in Geneva by Sebastien Iorio with PBS Investments. Welcome, Sebastien.
Thanks for having me.
Let's start off the discussion by looking at market dynamics for 2015. As we head into the new year, what events do you think are going to have the greatest effect on the markets? Is it the current oil situation, central bank policy, or the Greek elections, for instance?
Well, considering what we've had here in Switzerland in terms of shock to the system from the Swiss National Bank, I expect central bank activity to stay top of mind. But to your point, oil was the main macro story and continues to be. Also politics, we have the Greek elections that are imminent, but also elections in the UK, and as well as the rest of Central and Southern Europe. So in terms of what's going to have the greatest impact on markets, we believe that at the moment the Eurozone is at the crossroads of the global financial system. There is a massive excess of domestic savings that are fleeing the region in search of better risk-adjusted returns. So this has far-reaching implications as far as the US recovery, yields, FX, and even emerging markets.
So amid these events, how should investors position themselves?
Well, considering what we just said, macro risk is quite high, so investors should favor bottom-up approaches. We think that 2015 will be a year of rising asset class dispersion. And as you can see from the chart, what's interesting is 2014 offered very little divergence in terms of asset class performance. So really, this year we think investors should choose dispersion over convergence trades. For example, trend-following strategies with a very disciplined process should outperform. And the corollary is that, however, passive investing is at maximum risk, and therefore we should expect violent mean reverting moves ahead.
For a long time, the Swiss economy had been considered safe, but now, of course, the franc is all over the place. How will the strength of the franc impact how people are positioning their portfolios?
Well, you're right to point out that the SNB's move has been a shock to many market participants. From what it looks like, it certainly seems that they wanted to shock the system, and for all intents and purposes, it's a return to surprise tactics that were the hallmark of the US Fed during the Volcker years. So, more importantly, we think that it goes on to show that FX is a real risk in the context of a diversified portfolio, and therefore it should be neutralized. As you can see from the chart, the average Swiss franc-based balance fund suffered daily losses of 5 to 10%. So on the chart, you can see that our own multi-asset solution, PBS Multi Portfolio, the red line, didn't even budge. And that's because we fully hedged currency risk. So we think that this topic will be top of mind among investors in the coming weeks to years.
Well, something to look forward to. Thank you so much for joining me, Sebastien. That's all from Dukascopy TV for now. Do make sure to keep clicking back for regular updates and exclusive interviews. Bye for now.